Hello guys, welcome back to my channel. This is Hakman Traders. In this video I am going to be showing you how to get out of a trade or a trend before anything worse happens. So let's get started. By getting out I mean that if a trend is at its highest high right here, how would you recognize that it will turn bearish? For this reason you'll have to wait for the other candlesticks to form and trade according to that. As you can see that in this case it's bearish, the other one is too. So you have to wait for these two candlesticks to show you how the market will perform in the days ahead. Other than that, you can short your position here. As you can see here, it came down up till this point. Besides this, if a trend starts to move downward, you can see that the moving average and the parabolic SAR also changed its course, and the same is the case with the relative strength index. As you can see here at this level, it changed course, moving downward. It is in an overbought area. You can see that whenever a stock reach to its overbought area, means that it will come down. It will have to come down. So in this case you will have to know, place your stop loss in place of know how the market will do in the future. In this case, as you can see, for example, you have placed your stop loss here at this level. So whenever the stock reaches at this level, you have to sell your close your long position and place a short position here. As you can see that the market is going down. Another thing I want to mention here is, you can see that there is a resistance level here and there are two support level here. This line becomes a is acting as a support level for the price of these upper areas. So you can also identify from this as well. Another thing I want to show you is to know how you can get out of a trend by using Fibonacci retracements. I will plot it here, drag it till its highest high, plot it here. You can see that this is a pullback. So you have to know where the pullback would occur. The initial pullback would occur. You can see that it is a 38 level. So as the trend reverses, you have to know that how far will it come down, how far the market will go down. And in this case you can see that it came to the 38 level and went back up. In this case this market is still closed. You can see that now in this case, if you want to place a buy order here, you will have to wait for another candlestick to form to show you how the market will do ahead. So in these types of market you can trade, if you want to trade, you can buy here and sell at this level here. You can see that this is the overbought area in this level. So you have to sell close your position here and again place your short order here. It is quite easy if you understand the technical analysis. Now in this case, let me show you another case, this one. What to do in this case? Well, I've showed to you in the previous videos of mine on how to trade a side trend. You have to apply the same principles here. If you buy the stocks right here, you can see that these are at its oversold level, and don't know how far the market will go up. So you have to, in this case, if you place your buy position right here, you have to place a stop loss as well, and as the prices move upward, move your stop loss with it. And in this case you can see that it is a bearish candlestick, a really strong bearish candlestick, and move the market down. So you have to trade like this, and also watch my video about how to trade a side trend. You will gain more knowledge from that video, and gain consistent amount of profit by trading markets like these. Well, that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.